Hey everyone, welcome back to Corporate Decoder. Today we are diving into a filing where a company is making a deal to push back a payment date, which sounds like procrastinating on a massive scale. Is it smart or a sign of bigger issues? Let's find out. This report is about Friedman Industries, and it looks like they've made an agreement to extend the date they have to pay back a loan. Companies do this all the time, but it's worth checking if it's a smart move or if they're just kicking the can down the road. Before we get into the details, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss these filings with other investors. Alright, let's jump right into it. Friedman Industries entered into an agreement called a Fourth Amendment. In simple terms, they changed the rules of their existing loan agreement. This agreement involves Friedman Industries, the banks lending them money, and JP Morgan Chase Bank acting as the middleman. The main goal of this change is to push back the date when Friedman Industries has to pay back the money they borrowed. To understand this better, it's helpful to know that they are changing something called the Amended and Restated Credit Agreement, or A&R Credit Agreement, which was originally made back in May of 2021. The key thing to note is that this Fourth Amendment changes the A&R Credit Agreement in order to extend the maturity date. Think of the maturity date as the final due date of the loan. It's now been extended to August 19, 2026, so they have a bit more breathing room. Now, this summary is just the tip of the iceberg. If you want all the nitty-gritty details, the full text of the amendment will be available as part of their annual report on Form 10-K, which they will file with the Securities and Exchange Commission. That report will cover the period ending in March of 2025. Since this change involves a financial obligation, this report also mentions that the information is all connected. Basically, the details about extending the loan repayment date are also relevant to understanding their financial obligations. It's all part of the same story. Now let's switch gears and talk about what this all means. Pushing back a loan's maturity date can be a double-edged sword. On one hand, it gives Friedman Industries more time to generate cash and manage their finances. This can be helpful if they have plans to improve their business or face unexpected challenges. On the other hand, it might mean they are struggling to meet their original payment schedule. This could be a red flag if their overall financial situation isn't improving. In this case, the extension could be a sign that Friedman Industries needs more time to turn things around. It's essential to look at their financials in their upcoming 10-K report to see if they are making progress or just delaying the inevitable. So here's my take. Friedman Industries buys, processes, and sells steel. The steel industry can be tough with ups and downs depending on the economy. This loan extension could be a way for them to navigate those cycles. One of their strengths is their history in the business. They've been around for a while and know the steel market. But a risk is that changes in the economy or new competitors could hurt their profits. In conclusion, this loan extension is a move that needs a closer look. Investors should keep an eye on how Friedman Industries uses this extra time and whether their financial performance improves. Alright, that's our breakdown of Friedman Industries' latest filing. What's your take on this move and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate filings. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.